afternoon, everybody. Welcome to the final Trader Merlin show of 2022. It is Thursday, the 29th of December. Of course, we have markets tomorrow, but I won't be doing a show tomorrow just because why not make it a long weekend and I'll take some time off. Anyway, I want to thank everybody first and foremost who continues to watch this show every day. You know, sometimes it's hard to come up with live an hour's worth of daily content without any production team or any crew. So the fact that you guys keep supporting me and keep watching, I do appreciate that. Just so you know, this is the 212th show we will have done for 2022. We did 220 last year and 180 before. So creeping up on our 600th show that we've done since I left the power trading radio station. So again, thank you all so much for the support. I will do my best to continue to grow this channel. I don't see any reason why I should stop it going forward, but you never know. But right now, the plan is to keep things going in 2023. So let's focus on the topic at hand. I was going to talk about today's markets, which were great. Anybody who's waiting for that Santa Claus rally kind of popped up to the upside. However, I told you I wasn't going to talk much about the markets this week because we really should stay away from them. Should be relaxing and taking some time off. So I wanted to reflect at least to today's numbers. Of course, we got one more day to go, but today's numbers and reflect on what exactly happened this year. I don't know, kind of puts things in perspective when we see who are the winners, who are the losers overall. Obviously, the end of the year, most of us benchmark our performance by looking at our portfolio, but we'll look at the overall markets this time. So here's what the graphic looks like, a nice ugly end of 2022 graphic, all blood red on there. I tried to make that as ugly as I could. But I figured we would start with the final numbers for the year. And as you guys know, I like to do this monthly just to see kind of how the month went. And a lot of times what I'll do is I'll do the monthly performance and then the range for the month. But this time it's going to be slightly different. What I'm going to do is show you the first numbers are going to be the final number for 2022. And that, of course, that's through today. These numbers will probably change going forward, but it's interesting to step back and see what really happened over the course of this year because, you know, so many things have happened. You start things off at the bottom, crypto, Bitcoin, no surprise there, down 64% just this year alone, and that's not including the 20+% it was down before that from November to December of last year. So this is hands down the worst performer and by a very large margin. I guess the good news for anybody who's in that crypto space is for the last 2 months, it actually has stalled, which is even more surprising that we've seen a 64% slide in the price of Bitcoin in just 10 months, right? It was actually for the last two, has gained some. So really just ugly, ugly, ugly out there for the crypto front. Sheena says, buy Meta, huh? All right. Hey, you know, so here's the thing. If you say buy Meta, now, Sheena, you're on the hook. Now you have to say, here's why I would buy Meta. It's got a strong uptrend. It's going through, hit some demand zones, this, that, and the other thing. You know, just saying buy something, you need some support here. Give us some justifications to why buy Meta. We can maybe have a whole discussion on buying Meta. Anyway, let's run through these numbers, keep moving up. So Bitcoin was your worst performer by a large margin. And then it gets a lot better, but still remarkably bad. It was brutal here when you look at NASDAQ 100, down 32.74%. And this goes back to what we talked about earlier this week, which was during that huge market rally from 2020 all the way to the peak just earlier this year, the main four horsemen were the ones bringing up Amazon, Google, Microsoft, and Apple. And we said, yes, it's bringing it up, but it's also going to be the piece that brings it down. And that's what we witnessed here in 2022. We look at the NASDAQ, you know, it has been certainly absolutely just crushed. And on the hard red edge, I have actually, it's December at the very hard left side of the chart here. But you can see that we really peaked for one day. We opened January 3rd, and the market's made a higher high the next day, and we haven't made a high since. So been really, really ugly out there for S&P and NASDAQ as well. I guess the good news for anybody who's looking at the NASDAQ is, yes, it has formed a triple bottom here. Doesn't mean we're done yet from this slide. Still feels like there's more pain to go, but it definitely feels like it's time to have a little bit of a bounce here, and maybe we'll get that going through the end of the year as our Santa Claus rally statistically generally is those last 5 days of the year and the first 2 of January, and I have a trade on for that, and I'm updating you guys on the performance on that one. As of right now, I believe I didn't look at the end of the show or end of the day, but I believe I'm only down 3% on that. We were down 16% as of yesterday, now only down 3% on that trade, so not too shabby. All right, NASDAQ was down 32.74%. Moving on up our list here. Battling 120 supply hard. I love how you say will pop to 150. I like it. I like your optimism. You can will it all you want, but price will do what it wants to do. Maybe we'll look at that one near the end. Okay, moving on up, we've got the Russell 2000. It was down 20.63%. Here is the Russell 2000, so you guys can see that price chart, and this is all of 2022. Looking way better than the NASDAQ, right? At least we had this giant double bottom that formed really from June and the second bottom happening in September. The good news for anybody holding long Russell, which is small cap, is it's starting to make higher lows. Actually feels pretty darn good compared to the NASDAQ. So that, even though down 20%, at least it's showing some stabilization, which I think is making some people feel very happy. Now here is the lead dog, the dog that wags the tail. S&P 500 down 18.2%. Of course, that's as of just a little while ago. That number is going to change. That's not the end of year number, obviously, because we have more to trade. But here is your S&P chart, looking very similar to the Russell. The notable differences between this and the Russell 2000 is the S&P did not make a double bottom. It actually made a new low in September where the Russell bottomed and started to move up. We are seeing, we'll say higher highs, but also lower highs, but also higher lows. So you're kind of getting compression on the NASDAQ or S&P overall. I'm mixing up my markets here. Let me bring up drawing tools, draw a trend line. And this is on snap mode, which I do not want. So we'll put it to there. And you can see if I run through these peaks, I mean, it pretty much is still on a big downtrend. However, the good news, this slight saving grace here is, you know, we were on a bigger uptrend, although it's slowing down, and hopefully this will stabilize here. My guess is we'll probably go just a hair lower to 37.60, but right now it actually is a positive sign showing this market with compression, even though it's down 18.2% on the year. Moving on up, believe it or not, we actually had positive markets. That's right. There's something positive out there. Dow Jones Industrial Average down 7.06. I don't really look at the Dow too much, but it is performing fairly well. Here's your Dow futures. Again, the big difference here between this and the other three indexes that we looked at is the Dow broke through those highs we saw from back in August. That's a huge positive for the Dow Jones Industrial Average that all the other indexes cannot match. So right now, it's showing a little bit of bearishness for the past month just because it's making some lower lows. However, look how far away that low for the year is, down at 28,000. I mean, we're not even close to that yet, and all the other indexes are closer to the lows than the Dow. So this is the lead dog with regards to performance, only down 7.06% on the Dow. And I got two more to talk about. Next, we got gold. 6.52% down for gold, which is somewhat surprising. When I bring up the gold chart here, you know, we can go back to the beginning of the year. Hold on a second. I may have messed this one up again. This is on the GLD gold futures. I did these numbers off of GLD, and you can see why. That does a rollover effect, so it kind of tweaks things. So let's go back to the January number right there to where we are. Oh, that's interesting. It actually shows positive on that one. All right. Well, it said previously when I took those numbers, it was showing negative 6.52%, which I'm going to have to right now. Let's do this. We'll go 1 year, which we can do. We'll zoom out and, oh, maybe I did it from, that's my mistake because I took it from the previous close. So we'll call gold actually unchanged. Mind those numbers. You knew I was going to mess up at some point. It's just bound to happen. So gold unchanged. Let's go to the last one here, which was positive. 3.58% is what we have for crude oil. Now, crude oil really having a great year. Now, ending that year, let's adjust my charts here. So I have a 12-month spike. Let's go to daily. There we go. So ending the year on a fairly nice rally. As you can see, the crude oil chart going from those lows back here in early December was down about $70. Well, we rallied up over 80, currently sitting at 78.40. So all in all, a nice rally for the end of the year. And while it looks apocalyptic from this perspective, well, when we look at where we started the year, we were down significantly and really having that nice rally out of there. So all in all, a fairly decent year for oil, up 3.58% overall. What's happening with Bitcoin and my crypto? Yeah. You know, yours as well. I'm not going to tell everybody here how much I've lost because I don't want to ruin your day and make anybody feel nauseous. But yeah, I'm down significantly on that one. But again, my time horizon, as I mentioned, is long term. 2025 will be when we peak again, at least according to my calculations. We did some calculations in the CIL today, my crypto program, which was a lot of fun. And, you know, really 2025 is the next time we will peak in crypto. So there you go. All right, what else did I have? So that was your annual performance. So sad news for anybody holding long this year, although you did have some positive there with crude oil. Here is the monthly returns for the month of December. So even though oil had a 3.58% for the year, it was down 2.48% for the month of December overall. And the only one really showing positive gains there was gold at 0.83% gain. Otherwise, some pretty big negative losers. That XLK really taking on the chin. I saw a comment earlier, somebody saying, yeah, it was loading up on tech stocks this year. Believable direction. Ooh, man. Ouch, that hurt. That was by far your worst performance of the year was by tech. Really, really ugly. Oh, yeah. Big Eb, you trying to change your calculation there, huh? So... well, before I dive into our forecast, so what I'm going to probably do in January as well is I will open the chat up and say, hey, where do you guys think we'll be by the end of the year? And I mean, come on, we all know nobody knows, but it's fun to see because in my mind, I had a hypothesis about what I thought was going to happen. And I'll admit, it got fairly close to what my predictions were, especially because this happened on January 1st. But, you know, predictions don't mean a damn thing if you don't put your money where your mouth is and act on those predictions. So let's... before I dive into those forecasts that we had, I want to show you some stats that were put together by ETF.com, and this really is showing you net outflows for the year. And I thought this was really interesting. This was done about a week ago, just to see where the money is flowing out of. And money is pouring out of exchange-traded funds. The 10th on the list, gold, GLD, saw $2.7 billion worth of outflows in the overall for the year. Vanguard Europe ETF, which we don't really talk about too much, but VGK had $3 billion of worth of outflows. You had iShares Preferred and Income Securities, which is the PFF, so talking bond products. That had $3.26 billion come out of it. Then we get some more familiar names here. The U.S. TIPS. Now, I thought this was interesting. It says that there's a $4.13 billion being pulled out of the TIPS, which is SCHP. My assumption would be that that was all happening near the tail end of the year when the Fed was starting to backpedal a little bit on their forecast for raising rates. I thought that was kind of an interesting one. I kind of would assume that money would actually be going into TIPS if we were still in a rising rate environment, but this, I guess, is forecasting that we're not going to have rates rising so much and we might see TIP returns start to drop in the near future. Now, to maybe some more familiar ones. Enhanced Short Maturity Active ETF. I don't know what that one is. I don't trade that one, but down 4.49 billion. And then we have more Europe, money flowing out of Europe. JP Morgan Beta Builders Europe ETF, which is BBEU, that had about almost $5 billion worth of outflows. Michael says, yes, beat the market up 9%, feeling pretty damn good. You absolutely should. Absolutely. Like I say, anytime you beat the market, that's awesome, man. Congratulations. Morgan Stanley Vector, $6.34 billion. And we're getting to the good stuff. Now we got our top three podium finishers. And this is actually one that I am currently holding in my portfolio is XLF. Had $7 billion pulled out of XLF in 2022. Number two on that podium is iShares Tips Bonds again. So we had different fund families with their tips. I guess tons of money flowing out. It was $9.58 billion. And can you guys guess? I'll let you guys guess one just for fun. What ETF do you think had the most money pulled out of it in 2022, right? People just going, no, I'm out. I got to take my money off the table. Let's get rid of it, move on, and maybe move into something else or just collect my cash. It beat the iShares Tips. It had $9.71 billion taken out of this specific ETF over the course of 2022, which I found kind of surprising considering it's actually one of the better performers compared to some of the other ones. Shmev says SPY. I would have said QQQ myself. I personally would have said QQQ if this was a question posed to me, but Jimmy and Shmev are correct. It's actually the SPY. SPY had $9.7 billion pulled out. I mean, you add those up there, you've got some pretty substantial numbers. Okay, Karen. Actually, Karen, I don't even think it had that much money in the ARK fund, but it was more a question of just loss of value in ARK, right? I don't know if people were actually just getting out. I think at this point, people were just holding on for dear life in the ARK. But SPY was your best performer there. All right, now let's dive into sector performance, just so we can kind of look at these marketplaces. And again, I don't have all of the sectors on here, so for those who might be listening to the podcast, I've listed, I think, 11. I'm starting with the S&P at the top, which is the broad market, and all of these sector ETFs reflect a subset of this S&P 500. You have IYR, which is real estate, XLB, which is building materials, XLE, which is energy, XLF, which is financials, XLI, industrials, XLK, technology, XLP, consumer staples, XLU is utilities, XLV, healthcare, and XLY is consumer discretionary. So just because I like the chat and it's kind of fun to see you guys type in stuff here today, which you can only type in one. You just give me your first response that comes to mind. Well, and let's not do energy, because we all know energy absolutely kicked ass this year. So don't put XLE as your response. But what do you think? There's 3 total ETF sectors that were positive on the year, energy being one of them. So you have 2 left. What do you think they are? Just type in which one you think might be positive gainers on the year. Energy is already out, so don't put XLE. Put something else in there. But take your guess here. Just curious what you guys think might have been the better performers. And yes, I'm going to show you charts in just a minute of these and how they performed. Lori says healthcare. You know, that's interesting. It's a common thought that healthcare would be a good performer in these tough times. But I'm going to say it's not healthcare. No, not healthcare. Industrials. Okay, so industrials, looking for, infrastructure building, not positive for the year. Myra says XLP, which is going to be consumer staples. Well, who else has got XLV, XLY, XL Ukraine? Less Gold says utilities. Yes. And Daryl says so. The 3 market segments that were positive for the year: energy, consumer staples, and utilities. So this is very typical because let's be honest, no one's shortchanging themselves on toilet paper, right? It's not like, oh, I'm going to go to one ply. Same thing with utilities, right? We're not gonna cut back on utilities. But those were your 3 that are positive. Don't worry, I will show you here in just a second what the rates of return were for the year. Now you get one more pick. What do you think out of all of these was the worst performer? This one I think might surprise some people here, but what do you think was the worst performer on the year? Is it real estate, building materials, financials, industrials, technology, healthcare, or consumer discretionary? What do you think was the worst performer on the year? I'll give you just a sec to type that one in. It kind of surprised me as well, especially when you learn about what makes up these different categories. And I will show you here in just a second. It's kind of funny what makes up this category. So I got and Gmail says XLK. Right away, that would have been my first pick, right? Because tech, we know, has just been absolutely hammered this year. Surprisingly, it's not tech. It's not. It blows my mind that this is the end results. Consumer discretionary. XLY is your worst performer on the year. Here are the numbers to back it up. Technology was down XLK down 27.72%, but XLY, which is consumer discretionary, was down 37%. I would not have seen that coming. Now, for those you might want to know, when you look at consumer staples and consumer discretionary are kind of 2 broad categories that we should be looking at. And, consumer staples are going to be things that you just absolutely need. It's going to be, toilet paper, toothpaste, things like that. Actually, Coca-Cola is in on that list. There's a company in here that I don't feel should be on this list, and I'll explain why in just a second. But in consumer staples, Costco is considered a consumer staple. However, consumer discretionary are things that you don't necessarily need, but you want. Amazon is actually part of consumer discretionary. That seemed kind of weird to you that Costco is considered consumer staples, but Amazon is discretionary. And maybe it's because you can buy a wider variety of things on Amazon. I'm not exactly sure why that one is. Just for those who might be interested, I pulled up a list of the XLY components so you can see maybe why this is brought down. And I think it becomes really clear. Look at the top 2 performers, right? These had atrocious years. Amazon and Tesla both absolutely having a horrible year. And notice the weightings. Amazon is 23.58% of the consumer discretionary. Obviously, that brought down that index. And then 10% was Tesla. Tesla ruined a lot of market metrics this year because of how much it's fallen, specifically in the last few months. It's been an absolute bloodbath. But Thought I would share that with you. It's certainly Starbucks considered consumer discretionary. TJ Maxx and companies. I mean, come on, we need clothes. McDonald's, is that consumer discretionary? I think for a large part of America, McDonald's is considered a consumer staple. Let me real quickly just so you can see, I think the funny separation here. Let's look at XLP just for a sec so you guys can see the constituents there. Pepsi, Coca-Cola, Costco, Philip Morris. So they're saying cigarettes are a consumer staple. Mondelez, which is food products. Okay, sure. Colgate-Palmolive, great. Estee Lauder, listen, ladies, you can do without makeup. Some of you are beautiful. Some of you are prettier without makeup, I have to say. Kimberly-Clark, again, Constellation Brands. Monster Beverage, I'm calling that a consumer discretionary. I don't need a Monster energy drink. I can drink a glass of water. Anyway, yeah, Amazon Web Services, AWS, that's the lion's share of it, right? Lion's share of Amazon's money is coming from AWS, but I just thought it was interesting that they were in those different categories. So there's your sector performance for the year. Thought I'd have a little bit of fun with those numbers. Now let's go to the last piece here. What time we got? All right, we're cruising right along. I wasn't going to make a long show today. Unfortunately, I was preparing all these stats and figures and collecting all these numbers. MJ, so cannabis stocks, I don't have MJ in that S&P list, right? Generally, what I'm looking at are the XL ETFs, right, which are the sector spiders. There's actually a couple more than I have on here right now, but I decided to just go with the broad market. And certainly we could target specific market segments which may have underperformed or overperformed, like, I want to go to cannabis, or we could go to solar stocks, right? But this is just the broad sectors like that. Have not had a Mickey D's in 5 years. Oh, Ken, it's a guilty pleasure. For some reason, their chicken McNuggets, it's just deep fried crack. And I actually stopped when they told me that they were no longer having the hot mustard sauce, but they brought back the hot mustard sauce. So every now and again, it's a treat. Of course, my stomach, I pay for it later and have to stock up on Kimberly-Clark to deal with the aftermath of McDonald's. But other than that, Michael says, so would you think that maybe XLK would be the rational favorite to be a big winner next year? Let's talk about that in just a sec when we get to more of a sector rotation. Part of me, when we talked with who do we have in the program, we talked about portfolios and rebalancing. With Justin Krebs, we talked about end-of-year planning and portfolio rebalancing. The reason I bring this stuff up is if you have a well-diversified portfolio and you had these positions, right now you're looking at a huge gain in energy, massive. So in theory, what you should be doing right now is you should be in your portfolio. If you had, let's say this was a makeup of your portfolio and you started every year with, 11 here? 1, 2, 3, 4, 5, 6, 7, 8, 9. Perfect. You have 10 different sector ETFs. Let's say you did an equal weighting and you did 10% in each one, right? If that's the case, you did 10% in each one, well, you have a huge gain on energy. So what you should be doing is at the end of the year, you should rebalance this portfolio and sell out of your energy and get it back to 10%. And same thing, consumer discretionary. You'd be buying more consumer discretionary and buying technology because you're buying those at a discount. And essentially what you're doing there is you're selling your winners and you're buying the losers. That is not a successful trading strategy for the short term. But remember, when we're talking portfolios, you're talking longer term there. And over time, these things all will come back to balance. So could consumer discretionaries have another 30% down year next year? Sure, they could. But what would you be doing? You'd be rebuying more XLY this year because it's down 37%. If at another 30% down year, you'd be buying more XLY. So then when it does have its comeback, which it will have, right? Just don't know when. You'll have a heavier weighting in XLY. And when it does rally back up, you sell out of some of that and rebalance. So rebalancing, I think, becomes key here. And I think that kind of ties into your comment there, Mike, about either or. You could say XLY or XLV, right? Or sorry, XLK. Because they were both down huge. And even IYR, right? Real estate. The only ones that you'd probably want to sell out here is XLE. If you had 10% of your portfolio in consumer staples or utilities, you're pretty much unchanged, slight gains. You would leave it there. But really what you're going to do is take your gains from your energy and you're going to buy some of these more beaten down sectors. And I think that over the long haul, that makes sense. I don't think it necessarily makes sense that it's going to happen this year, right? We don't know if that's going to continue to sell off with consumer discretionaries or not. My gut tells me that, by the way, just in full disclosure, I have sold puts on XLY right now, which I'm hoping I get because I collected a boatload of premium on them. And if I get filled on those, I actually do think you're going to, personally, I do think you're going to see a recovery here in consumer discretionary because of Tesla. Tesla has already suffered massive losses. I think if it doesn't stop here, I think the bottom is fairly close in the near future for Tesla. I had a huge jump up today in Tesla as well. But yes, I sold puts on XLY, and if I get executed in January, I get executed. I'm happy to own XLY for the long haul. I believe Amazon and some of these other companies will probably do rather well. The Popeyes, you know what? I've had Popeyes in Las Vegas. That's pretty much it, and they make a damn fine chicken. Okay, so here we go. Drum roll, we get to have some fun because at the beginning of the year, which I will do on our January, that Tuesday show, what's that, the 3rd? Real quick, let me look at the calendar here. January 3rd will be the next show that we do here. So I'll ask everybody, January 3rd, where you think the markets are going to be headed. And we had a long show about, what's the roadmap for 2022, right? We don't know where it's going to go, and there are a lot of varying opinions, and this is why trading works. So here is the results from the poll that we did back in January, on the first trading day of the year, we did this poll. You can see all the different requests. So, what I'll do is I'm going to start to slowly remove the requests. So down at the bottom, Laz says, middle of the year, we'll go down to 2,000. End of the year, we will go to 600. So you missed it the most because we didn't get down to 2,000, and we certainly didn't get down to 600. So I'm going to just mark you off there. You're off the chart. And then I see some here that were maybe missed the mark. Walter in the middle there says, definitely hit above 5,000. Okay, well, there's the chart, and here is the last year. So everybody can see where we're at. We did not get above 5,000 at any point. So, Walter, we're going to have to take you off the chart to see who's the victor here. So, Walter's gone. Now, you see a lot of people, Koja, Big Eb, 5180, huh, buddy? Big Eb, what's going on? You're a little optimistic there, bud. Tracy, 5,300. Steve says 5,250. Yeah, you're off the charts as well. Anything over 5,000, I'm taking off of that chart. And even down below, we can see we had some fairly lofty guesses. We're right now at 3,870. So, is it reasonable we could close at 3,900? Sure. Is it reasonable 3,850? Sure. But these guys got to go. Patrick, 4,200. Tun Kanata, 5,180. Margaret had 4,500, and Rob L 4,453. Later, guys. And then there were 6. So from here, we have to do some minor adjustments as well. Tom had 4,413. And, at the beginning of the year, 4,413, that was a fairly, 4,413 is right where my cursor is. We really hit that in January. So 2 weeks after we hit that number and really haven't looked back since. So we got to get rid of Mr. Barr. See ya, Tom. And now we're down to 5. So from the 5, I guess it's more about finding the ones that just were total outliers. So not total, but Jerry here has 3,000. Well, we didn't get that low. We got to 45. The absolute low for the year on the S&P was 3,500. So there you go, Jerry, you're gone. And let's see, NJ had 3,800. Well, we may actually get that tomorrow, but you're still a little far off. Now, I'm going to remove myself. Because I think we fall to 3,800, 20% decline, then bounce back up to 4,050. Given the fact that I made that call back on January 1st, I'm pretty happy with it. We did have a pretty big sell-off. 3,800 was right here where my cursor is. We went a bit below that, admittedly, and then we did have a bounce back up, which is normal, but I actually thought we'd stop at 20%. So, sure you did, 4013. No, I have it written down, bud. I have it written down. So I removed myself from the list. I did not win. And next we have, what do I got? I got 3. So Mario says up 500 and then a 750 pullback. Well, or 750 and then a pullback. Well, we did not get that. We did have a big pullback, but you weren't really specific there, Mario. So I'm gonna remove yours, which leaves 2. Now NJ said 3,800, and Mike said up to 5,000 and ultimately down to 3,900. So It's a tough call. You kind of you lost a point or two because you said up to 5,000, but it really was what's the end of year forecast. So 3,900 and 3,800 right now. I got to give it to Mike LaRusso for being at 3,900. We're currently at 3,871, including the after-hours session. Could something happen by tomorrow? Sure. We could get a big sell-off or we get a big rally. NJ would win if we had a pretty big sell-off of, let's say, 70 points. But based off what I see here, I've got to give the end of the year forecast trophy, which I don't have one, to Mike LaRusso. Congrats, Mike, on that one. It's been a year in the waiting. Unfortunately, I don't have a prize department. Yeah, I wish. I could do dinner. I could do dinner somewhere. McDonald's. We'll do McDonald's. Where do you live, Mike? Are you in Orange County? Are you close? Are you in, where are you at? I could potentially do dinner as a prize. It's easier than trying to buy something and shipping it over. You're in Southern California, maybe I'll do dinner as a prize. It'd be fun if I actually had a prize department or some money I could give prizes to. What I do have? Since Mr. Gong sent me some shot glasses. Maybe, do you drink, Mike? If you do, Glendora, maybe we can meet somewhere and have some dinner, and I can bring up a couple shot glasses as well. So there you go. There's your prize winner for the year. And that was pretty much it. I guess big takeaways from 2022 for me were, that prevailing trend that started really in January. I probably would have had a much greater rate of return if I had a stronger bearish bias. There were some periods where I was find myself going long when I probably shouldn't have. Specifically in November, when I was riding that up, I was actually short and kept getting stopped out in November, so I flipped and started to go long, and then I got stopped out of those ones. So November was really probably the worst month of the year for me. Prize paid in Shiba Inu. No, I'll make my own coin that's worth nothing either. I'll just give you those prizes, but there you go. So, we talked about the trade plan or trading review of your trades, which I hope a lot of you took to heart and are going to do some of that this weekend and really start thinking about where you're going to go for 2023. I'm going to approach it the same way. Oh, I'm no reverend. Heck no. No, I'm no reverend over here. I'm I'm a student of life. As far as markets go, certainly we could look at other market segments, and I saw, I believe Believable Direction, was talking about, the cannabis industry. I mean, look, this thing is still just hemorrhaging. We could look at the results for 2022, but there really hasn't been anything. There was one glimmer of hope that happened in October and early November, right, where we started to look good, coming up towards supply, and then once we hit that supply, it just plummeted from there. So, that is just a downright ugly chart. Overall, for the year, cannabis down 61%. Let's go look at, RK Don. How you doing, my friend? Happy New Year. Hope you do something fun for you and your viewers. We talked about ARK and kind of what's been going on with that one. I wouldn't call this a sector ETF. That's why I did not include it in my end of year analysis numbers. But for the year, Kathy Wood, who was living high on the hog, it's down 67%. At some point, does ARK become a buy? Maybe. It's got some holdings. I'm not exactly sure what those holdings are, but we can find out by going to ARKK. This should display what she's holding. Oh, God. Her number one holding is Zoom. No, I'm not buying it. Zoom and Roku are her top two holdings. Yeah, I'm going to have to pass on that one. No thanks. I still would short the hell out of Zoom, which is why my stream's probably been messing up on me. But no Zoom. What else? Is there anything in here that she has that I like? I like Shopify, but notice all the things that she had, sorry, not all. A lot of what she has in here were companies that benefited dramatically from staying at home and quarantining. Teladoc, right? That's stay at home, don't go to the doctor, just do it from your house. Shopify, start your own business, work from home. Zoom, let's do online communications because we can't go to the office. That stuff's all disappeared, right? We don't really need that much anymore. And Coinbase, goodness gracious. I won't be buying ARK. I just don't. I'd rather build my own portfolio than have access to these different companies. Nope, not a fan. Yeah, still dropping. All right, the trend is your friend to the bend at the end. An ARK fund right now. There's no bend. You've got a little tiny hammer formation, I guess, if you really want to call it that. But I'd rather play some of these sector ETFs. I think have a lot more opportunity. I know it's not new. Well, the reason I love it, Don, is, and I love giving props to guests when I have them on the show. we had Colin Teddards of the Investor Channel on right where this blue line was, and he was saying, this is a sinking ship. I even have a graphic for the show. It was the Titanic sinking and had ARK written on it and Kathy Wood jumping off the ship when we're over $100, and here we are at 31. So I did not short this one. I wish I would have, because that was a hell of a play. But, you know, as things evolve, there's definitely an ebb and flow to price. And does there become a point? Kind of like we can make the argument with Tesla right now, right? Does there come a point when you say, you know, the book value or the assets or just the company of Tesla is worth more than X amount? And what price is that to you? You know, for a lot of people, I think, Don, you were talking 100, but then you also mentioned 65 and the $60 level. You know, for some people right now is the buy point for Tesla. And you know, I guess you got to say, is this thing going to go under? Is it going to disappear? I don't think so. It will be a value play at some point. Same thing with Amazon. When we look at Amazon's chart on a weekly, I mean, this is really bad. Let's go back to the beginning of 2020 just to see what Amazon is down for the year. There it is, red candle there. In snap mode, you're looking at Amazon down 49% for this year, right? That's a huge value proposition to be buying Amazon 50% off. I don't think Amazon's going anywhere. I just recently sent them another payment for $149 from Amazon Prime. Kathy was crazy for saying automotive Tesla would go to 3. Yeah, she was. Look, she said a lot of things that are going crazy. She said Bitcoin, by next year, going to be 500,000. I don't see that. I don't see anything technically that you could argue would make Bitcoin $500,000 next year. Now, go a decade out? Yeah, absolutely. I was looking at Zoom thinking, yep. God, Zoom. It's funny because we were talking about how so much different competition has stepped up. It's really surprising that they're even still at $68, in my opinion. You know, they could have done more to corner the market, or they should have just sold out to somebody who needed a video platform and just said, we'll be done with it, because ultimately, you know, Google and Apple and Microsoft are all going to come up with competing products, which is what happened. All right. I'm done. I'm going to call it a short show today. We get 37 minutes. Yeah, I like these short shows. It makes it easier. Shopify. So Shopify is a little bit different there. You know, Shopify really, I think, allowed a lot of people to work from home and start their own businesses from their house. And you can see that, you know, even going into that 2022 pandemic lows, Shopify was still doing pretty good. I mean, Shopify was doing absolutely amazing, let's be honest. This is one of the ones that Larry picked a few years back and was like, you got to go long on Shopify. I was like, maybe. You know, as a business model, I think it's great because it still helps people get up and running their business and integrating in payment networks and online stores. But is it a buy now at $35 versus where it was at 170? I don't know. I'd have to look a little bit deeper into those fundamentals because I don't. I'm not a big fundamental person, so I couldn't tell off the top of my head. You still have no? I don't have options on Apple. I don't trade Apple, so Apple's dead to me. I do not. I sold put options. The only put options I have right now, I have, what do I have open right now? I have put options on Tesla that I sold at the 120, which I was actually going to buy some call options yesterday, but I decided not to. Just let's not have more exposure at the end of the year. I had sold some puts on XLY. I have covered calls on XLF, and I bought the call options on QQQ just for the Santa Claus rally. So there you go. Zoom will go down. All right, so as this year wraps up, you know, I don't have any economic calendars for tomorrow or for anything because I really just not even paying attention to the markets really this week. It's more about self-reflection and analyzing my portfolio and kind of, maybe I need to focus on my hair. Holy cow, what's going on with my hair over here? Look at a big mess. Yeah, it's funny, Lisa. I blacklisted Apple for a reason, and the reason was back in 2000 and 2001, I was always trading Apple on the trading floor back in Irvine, California. And for whatever reason, at the end of the year, I did my analysis, and as I run through and was looking at what securities do I make money with and which ones do I not, Apple was consistently on there as a net loser for me. Like week after week, month after month, it seemed like the more I traded Apple, the more I lost. And I know for me, it's fairly easy to make, if someone came to me and said, well, I have this problem, Merlin, every time I trade the stock, it seems like I lose money. Well, be your own psychologist at that point. You have three choices. You can continue to trade Apple, Merlin, and continue to lose more and more money, which is just outright stupid. You can stop trading Apple altogether and just say, screw you, I got thousands of other securities to trade. Or you can dig deep, really work at fixing what is causing you to lose money with Apple. Now, which one of those is the most, well, the dumbest one is to keep trading Apple because I'm losing money. The most logical one would be to fix the problem and, maybe trade Apple down the road, fix whatever I was doing wrong. But that's a lot of work, right? I really have to dig deep and figure out what on earth I'm doing right, what I'm doing wrong, and try to fix that or just eliminate it altogether. So I did that as a cornerstone of my trading plan. Page 3, top corner, got a little circle around it, or Apple logo with a red circle and a line through it. And for me, I could trade Apple today. There's no doubt. I don't treat it any differently than anything else. I know I could trade it today, but I want to make sure that when I say I'm going to do something, I do something. And in that trade plan, it says I can't trade Apple, so I'm not going to trade Apple again. That's simple as that. There's a few of them. Apple is the only one that's written in my trading plan. I have a little personal gripe against Cisco and Best Buy as well. Those are two that have stung me so bad in the past. But I think the easiest solution, if there was only like 3 things in the world to trade and one of them was Apple, okay, I might lift that ban. But we have thousands of other things. There's so many other things that we could focus on. The tough part is I get people like Don here always talking about Apple. No, it's just, everybody's always talking about Apple. Exactly believable direction. Doc, it hurts when I do this. We'll stop doing that, right? Oh, it hurts when I smack my head against a wall. So the answer is, I don't know, sometimes the easiest solutions for us are the ones that most people decide not to do. They want to look for something more challenging to do. All right, that's going to do it for 2022. I'm done. I'm going to go take my dog to the vet. He's itching like crazy. Then I'm going to go relax and maybe have a glass of whiskey and enjoy this Thursday evening. Maybe watch some Thursday Night Football. Really, still at this point? Anyway, again, I want to thank everybody for their support over the years. I know some of you have been with this since I started Trader Merlin back in 2020 when the pandemic hit. So again, I thank you guys for your support. I hope that you all learn from your trading, your mistakes, your good trades as well, and hopefully turn some of those losses around. I saw some people over there saying, hey, lost some money this year. Figure out why. Let's figure out what happened, and then hopefully we can turn that around, get to some more consistent trading in 2023, and get those rates of return that you're looking for. So thank you so much. Let's see, what do we got here? What are we talking about, Apple? Were your losses with Apple worse than your yearly losing account? No, I mean, it was just one of those things that kept bringing my account down. I mean, and back in those days, you got to understand, it was Wild West. I mean, there were days where I would literally walk in the back office and have $10,000 worth of profit, right? 10 grand days with regularity. And then you go into the back office and it's like, oh, how come I only have $1,000? Well, because of commissions. And, it was kind of like figuring out the business model there. The guy who ran the trading floor was one making all the money. I wasn't. I was getting like 10% of what I made. And if I lost, I got 100% of the losses. It was a horrible thing. So for me, it was more about just looking at what is causing my drawdowns. And ultimately, Apple was one of the major ones. Go Raiders, that's right. Thomasina, you're facing the Niners this weekend. Want to make a wager? I think the Niners got your number. We're favored by 10, too. Anyway, that's going to do it for me. I hope you guys all had a great trading year. I hope you learned a lot. If there's things you want me to cover in 2023, comments, questions, feedback, you can email me at TraderMerlin@gmail.com or put any comments you guys have below the YouTube videos. That's supposed to help. I think it actually is. I noticed that the views, since I'm monetized, actually have gone up a little bit, which I guess is a good thing. But, yeah, that's going to do it for 2022. I wish you all a very happy new year. I wish I had a glass of whiskey to cheers you, but I'll have one of those here very shortly. So have a fantastic remainder of your trading week. Take it easy. Don't trade. It's going to be low volume anyway. And we'll see you guys January 3rd as we kick things off and come up with a forecast for 2023. Take care, everybody.